Hi there traders, this is Steve Miley, the market chartist again for FX Explained, and here we are looking at the pound versus the US dollar, GBPUSD, the cable spot FX rate. Well, certainly a far more resilient tone. The market kind of trying to rebound in here from last week, but still suffering from this very negative theme that we've seen throughout May. The pound under downside pressures, high death rates from COVID-19, and then alongside concerns about Brexit. Trade talks, actually, not the actual Brexit talks, the trade talks with the EU not going so well in here. So lots of concerns about that. And double top pattern we established up here on the breakdown through 122.47 with these dual peaks at 126.47 and 126.43. So the outlook overall negative. We did see a slight rebound in here last week, but then the market rolling back lower. But the past 24 hours have seen a surge higher. Now, two reasons for this. One, US dollar weakness. The US dollar is still seen as an ultimate safe haven right here, right now, during the pandemic, and the US dollar losing ground in here over the last 24 hours against most major currencies in here as we've shifted back to a more aggressive risk on tone. Remember, equity markets breaking out on the upside, and that's as we're seeing lockdowns being eased globally successfully so far at the moment, and we're seeing the global economy starting to restart. Also hopes around a COVID-19 vaccine. All of these helping the dollar in here to slightly weaken. So we're seeing a weakness in the US dollar across the board, and the pound getting a help on the upside in here. So the pound leg of GBPUSD more positive, as the UK and the EU trade talks in here. Some concessions apparently going to be coming from the EU side around the very sensitive topic of fisheries, where we're stuck at the moment. So that's seen as a positive for the pound as well. So those two things in here sending the pound higher, but also the dollar lower in here, in this risk on scenario. And so we saw a surge higher, and then technically we've reinforced this break of this downtrend line, only having tentatively broken that downtrend line. Also took out the resistances here at 122.26, 122.96 and 123.40 up to 123.63 yesterday, and that leaves the pressure higher back for a challenge back up to 123.63, and then higher targets at 123.78, and then a key level at 124.67. Up above there would then neutralize the intermediate bearish theme that we saw from this bigger double top pattern. So upside pressure is very much intact, whilst we're holding above this support area here at 122.61, 122.53. This has been Steve Miley, the market chartist for FX Explained. I'm going to wish you all a great trading day, and please do be safe out there.